Hello again, fellow BeachBum traders. We hope that you had a great trading week last week. We hope that you found our weekly game plan from last week helpful to you in your trading. Please let us know if you found our weekly game plan from last week helpful to you in the comments below. And please let us know how your trading went this week. Good or bad, what did you learn? How can we improve our weekly game plans to help you succeed in your trading? Now let's get started preparing our game plan for next week. Hello again, fellow BeachBum traders. Let's get started preparing our weekly trading game plan for the week of January 17th through January 21st. Just a quick reminder that Monday, January 17th, the markets are closed for Martin Luther King Day. So again, the markets are closed on Monday, January 17th. So that will give us an extra day to complete our trading game plan and pick our stocks for going into Tuesday, January 18th. So let's get started. I'm going to start again in the email, the browser version of the email that I received from Jim Cramer's CNBC Investing Club. We'll do a quick review of this. I'll put the link to this browser version of the email in the description box below for your quick reference. So if we just do a quick review of what Jim Cramer said about the markets, you can see, finished lower and inflation, and Federal Reserve interest rate hikes. So we're going to talk about, again, as we have been talking about, we've been saying for months that inflation's hot, hot, hot. It's impacting the markets, and the Fed's plans to raise interest rate hikes up to 4 times this year, up from 3 and starting very quickly. So you'll see a lot of talk about valuation. Value matters now. And we've been saying this for a while, and then again a lot of discussion of interest rate hikes. So you can read the details for yourself, but again those are the major themes: is inflation and the Fed, and how fast is the Fed going to raise hikes. There's now talk, we'll talk about this more in the strategy, that now not only are they talking about tapering, wrapping up quickly, but now they're talking about not only letting their bond purchases roll off of their balance sheet, but maybe even selling bonds. So that impact on bonds will be even more severe as they accelerate that plan. So if we review some of the economic data highlights from Jim Cramer, and we'll add our commentary in a minute. We can see again, inflation is a little hotter than expectations. The CPI on Wednesday came in a little hot. And then we'll talk a little bit about the jobs market, the Great Resignation, how to interpret some of this information, and what that may mean in terms of our strategy going forward. You could see jobless claims was higher than expected. And then we see the PPI, the producer price index, was a little lower than expected. So inflation on the producer, the supplier side, is a little bit lower, and on the consumer side is higher. And again, that's probably a flow through of previous PPI data that was hot. And then Friday we got very disappointing retail sales numbers. Just some background, some information for y'all where I'm coming from on some of this is I used to design computer systems, and I used to be a consultant for some very large retailers. So the fact that these December numbers are bad bodes very poorly for retailers. Generally they need to make their money. Black Fridays, when their sales turn black for the year. The fact that the holiday season was bad bodes very poorly for retailers, does not bode well for consumer spending, and we also saw consumer sentiment was down on Friday. These factors do not bode well for retailers, consumer spending, consumer sentiment, because December, the holiday season, is where they make their money. Next quarter is going to be, in my opinion, Again, that's not financial advice, just my opinion. But this was the quarter where they could beat expectations, beat earnings. The next quarter is going to be bad. So, my opinion, but we'll see how things work out. And then what are we watching ahead? Again, we're just starting into earnings season. We also got some bank earnings that were not good. That was surprising, but it was not good. So the banking sector got hit, financials got hit. Again, now it's time to listen to earnings and look for irrational responses to earnings reports and be nimble and act accordingly. And we'll talk about that in our strategy session at the end of this video. So some of the economic data, and we'll look at the whole calendar in a minute, but we see kind of standard stuff on Tuesday, Wednesday. Thursday we get jobless claims as usual, and then Friday typical data. So let's see where the markets ended up, what do things look like, what input data do we have, and how can we strategize for our stock picking in part 2 of our weekly trading game plan. Okay, let's quickly look at how the markets ended up on Friday. I'm on the home page of FinViz. You can find our affiliate link to FinViz in the description box below. Again, we can see it was a choppy market on Friday. The Dow turned down, NASDAQ finished up, and S&P finished up, but we can also see there were a lot of decliners. There's still a lot of stocks below their 50-day moving average, a lot below their 200-day moving average. And then we had a large number hitting new lows and larger declinings, and we'll see this again in the Weeble charts. I think it's a little easier to see there. We see the heat map, tech, the NASDAQ turned up, so big tech recovered and finished up, and pretty much it was otherwise just very choppy. If we scroll down to see the news, the latest news as of early Saturday morning, we can see, stampede into inflation-linked bonds. So again, inflation, disappointing bank results, mixed bank earnings, retail sales miss. Those are things we just pointed out. And then, pandemic issues. We also saw, and we'll talk about this in a little more detail, is surprisingly oil went up. It's peaking out around 84 or so. Again, we'll talk about why we think that's surprising. Nat gas turned down. Again, that's kind of surprising. We'll talk about some of the factors in that area as well. And gold's been broke 1800s, been hovering in the low 1800s lately, and then we see treasuries, spiked up. The 30-year spiked up over 2. The 10-year's been in the 1.7, high 1.7 range, and we'll look at that in the futures in a minute. Okay, let's take a quick look at each of the indices and where they are falling and their trends, ranges in FinViz. So the SPY, we can see it's kind of now is range bound. We've got a support and resistance level. It's kind of sitting in the middle. It has broken down below that trend line, and it looks like it may act range bound. So choppy market, range bound for the time being. Let me go look at the Qs as well, and then I'll talk about a potential strategy. If you're a day trader, a momentum trader, a scalper, one opportunity you might want to take advantage of in this kind of choppy up and down market is if you're very nimble, and I may try to learn how to do this better, but if you can see the direction that the indices that the market is taking at a given time, you can take advantage of it. And some ways you can do that with the indices is by using the leveraged ETF. So on the SPY, the ones we like is SPXU to short the SPY. There's a UPRO to long the SPY. For the Qs, it's a little easier. SQQQ to short the Qs, to short the NASDAQ, and TQQQ to long the NASDAQ. The Russell is SRTY to short the Russell, and URTY to long the Russell. And the Dow is SDOW to short the Dow, and UDOW to long the Dow. So again, if you're a day trader, scalper, momentum trader, and you're very nimble, you can use those to, if you see the direction of the index, you can very quickly jump onto that trend and play it, because you see we're seeing some pretty severe ups and downs. So if you catch these turns, either one way or the other, there's opportunity to make money. So again, I just wanted to let you know about that if you don't already know, and I hope that helps. We can see in the Qs, it also was choppy, range bound, and broke down. So a lot of pressure on tech, a lot of pressure on the NASDAQ. Again, I would expect more chop. It may stay in this range, or it may drop down further. Neither one would be surprising. Again, I'm not taking a long-term position in any of these indices, but on a daily basis, short-term, there may be some opportunity. So if we look at the Dow, DIA, again, very similar, although it's in an expanding trend, an expanding triangle, but again, it looks like it's kind of range bound, very choppy. Again, it's sitting right at its 200-day moving average. So again, expect more chop. Also, we're seeing rotation between these indices. So when the NASDAQ goes up, the Dow goes down. When the Dow goes up, the NASDAQ goes down. So again, if you catch that rotation, there's an opportunity to say, okay, NASDAQ's going up, Dow's going to go down. You can play both sides of that. So if we look at the IWM, the Russell, again under a lot of pressure when value gets hit, and we can see it's bouncing off this support line. It's piercing it somewhat, but it is holding that support line reasonably well, and then bouncing off of it. Again, highly volatile, very choppy. That's pretty much what I would expect going forward, particularly as we end the January effect going into February. We may see more downside. We saw in previous game plan videos, the January effect says January should be generally up, and then February is a very poor month for market performance. So we can start preparing for that. We still got 2 weeks in January, so we'll play that accordingly, but then we'll prepare for February. We could see the VIX was choppy around some Fed events that we'll talk about in a minute. It ended up, in the low 20s or just above or below the low 20s. 19.19 is where it's sitting at right now. It spiked up briefly, but we haven't really seen a panic. And we'll see that in a number of indicators. We see a little bit of volatility, but not a lot of panic. Now we're going into a very long weekend, a holiday weekend. When we come back on Tuesday, it would not surprise me to see higher volatility, spike of volatility due to the long weekend. So we do, as we mentioned before, we've got a buyout sitting high on the VIX using SVXY. If we get to one of these spikes, we'll catch it and then short it back down as it reverts. So, well, again, we'll talk about some more strategies towards the end of the video, but I hope that all helps. Okay, let's take a quick look at the groups, the sectors in FinViz. So I went to the Groups tab in FinViz. Again, you can find our affiliate link to FinViz in the description box below. Let's see which sectors are doing well versus the best, the worst for this week. We see, Friday energy outperformed, and actually tech recovered, and then, real estate, materials. So we saw this rotation, but for the whole week, energy's been way outperforming. So, and then materials. You see oscillation in the materials. So it was, for the week it did well. Friday it did poorly, possibly some profit taking, and Then for the month, we see energy basic materials. So the current trend would be energy basic materials. Now, financials were outperforming, and then we heard the bank sector did poorly, and so financials went down. Um, and then again, for 3 months, again, energy basic materials. Utilities is defensive, so we'll talk about some of the defensive sectors going forward. So again, this is a great way to see the sector rotation, but again, right now the strong themes is energy, basic materials, and some defensive. So I hope that helps. Okay, as I mentioned in our earlier weekly trading game plans, we're just starting to look at cryptocurrencies, and we're looking for opportunities to get into some positions in cryptocurrencies, since we can trade cryptocurrencies in Webull. So we'll start looking at where the cryptocurrencies are, and one place we can see them is there's a crypto tab in FinViz. Again, you can find our affiliate link to FinViz in the description box below, and you can click on charts, and you can see, very similar to the futures charts, we can quickly see the trend in the cryptocurrencies for the major cryptocurrencies. So we can see Bitcoin, Litecoin, Ethereum, etc. We see everything's kind of down, and it's volatile. Cryptocurrencies are volatile, but we can see kind of the trend is overall down, a little bit of a bounce later in the week. We are looking for opportunities lower, and we can look at that in more detail, probably in a longer term chart in Webull. Now let's flip over quickly to the futures tab. So again, you can flip over to the futures. We can see the heat map. I prefer the charts, so we can see the trends. Another thing I wanted to point out that's kind of nice in FinViz, I don't know if I pointed this out before, but you can see different time scales in the futures charts in FinViz. So right now it defaults to the daily, but during the day I flip over to the 5-minute chart. So you can do 5-minute, hour, day, week, month. So you can see activity during the day. Obviously it's not moving right now a whole lot, but during the day I like to look at the 5-minute and see any kind of reversals, etc. So if we go back to the daily, so we can see the trend. Again, we can see the Dow, everything kind of rolled over and went down. We see, it's hopefully holding support, but there's potential significant downside. So again, be nimble, play the trend, play the rotations, but I wouldn't take a long-term position either way right now. If we look at oil, and again, we'll talk in more detail with some of the events in oil, we can see oil's run up, and there's a 85 kind of top. People keep talking about $100 oil, etc. When we get further into our strategy session, we'll talk more about my thoughts on what's the factors that make that surprising, and I have a hard time believing that it's going to go 100 plus, but people have been saying that for months, and they're still saying it. So we see the VIX perked up a little bit, but it just hasn't really spiked. We haven't had that panic, that capitulation. So we see all the oils ran up, have been running up. We see this nice nat gas peak fill the gap. As you've seen in the past weekly trading game plans, we've been scalping natural gas using boil through this and waiting for this gap fill. We got a nice gap fill, peaked out. We took our profits there. It hit our stop loss when it turned down on here. We made a 40% profit in boil. Nat gas, now it's turned down. If it comes back down, we'll play it again. Maybe we'll have to scalp it again until we get swing up higher. Some of the factors, and we'll talk about this later, is we're getting a cold snap, and that's going to drive nat gas prices up. Also, the disquiet, the tensions in the Russia-Ukraine area is impacting European oil or European nat gas. And I don't know if you heard that it sounds like the U.S. is shipping LNG, liquefied natural gas, to Europe to ease their price pressures. So demand is high, prices are coming down, again counterintuitive. we like these plays, and we play this. You can play the long and nat gas using boil, and the short on nat gas using cold, KOLD. So again, if you're nimble, you could play both sides of these swings. Gold, we can see it, it's sitting around 1800 or so. It's still got upside, but it's choppy. Silver, same way, got plenty of upside, but right now it's just hovering this range. All the metals are doing that. We see some other commodities ran up, and we're looking for more ETFs to be able to play more of these commodities when we see an extension. You see lumber went nuts. So far, I don't know of a way to short lumber using an ETF, but I would love to be able to find one on such an extended play. Orange juice, same way. And then we see the treasuries has been very choppy, very counterintuitive. Ran up and then dumped, and ran up and dumped. So, we expect demand for bonds, the prices to be down because the Fed's going to taper their purchases and possibly even sell. So downward pressure on prices, upward pressure on yields. When we get an extreme in those areas, we'll play bonds as well. So, hope that all helps. We'll continue. Okay, let's talk a little bit more about the economic data we got this past week and what economic data and earnings we expect for next week. We can look at the economic calendar in investing.com, but I also wanted to point out that we have added a number of links to our new homepage, which is beachbumtrading.com without the U and bum. And it's still under construction, but if you scroll down, we have added a links section on the right panel, and you can expand each of these sections where we've got our favorite trading tools, our favorite trading platforms, a number of reference links that we reference in many of our trading game plans. You can see here's a quick link to investing.com, FinBiz, Seeking Alpha, etc. So many of the tools and reference links that you see in our videos and the description boxes, etc., we're going to include here for your quick and easy reference anytime, and so we probably won't have to include them all the time. So again, please see our beachbumtrading.com homepage. Again, we're adding things as we're able. It's under construction, but we want to provide you the tools and links for anytime reference as quickly and easily as possible. So again, if we go click on that link to investing.com, we can go to the earnings calendar, news, earnings calendar, etc. We can look at what happened this week. So we can just scroll down through the days, look for the flags. So we see wholesale trade inventories was negative, worse than expected. Tuesday. Okay, so and again, this is one of the reasons, I think oil supply, will see several indications that supply is increasing. There's several reasons that we can talk about in our strategy why demand is probably going to decrease or at least stabilize. So supply increasing, demand decreasing, and so we expect the prices to eventually revert. Again, we see, oil inventories were depleted more than expected. Gasoline inventories grew more than expected. And then we see jobless claims was better than expected. Continuing was better than expected. New was worse than expected. So, and then we see PPI was better than expected. And then let me see if I can find the oil rig count on Friday, because that was another thing that I thought was surprising with the oil is the oil rig count on Friday, Baker Hughes. Okay, so again, if we look at some of the events from this week, on Tuesday we had the Powell testifying, and they talked about possibly winding down their balance sheet, and again that caused some volatility, downturn in the market. On Wednesday, we've got hot CPI data. A little higher than expected, again caused some concern with inflation, although, and you'll see a lot of the headlines, we've been saying for months, inflation's hot, it's not transitory, it's going to continue to be hot, surprise, surprise. And then we saw, crude oil inventories were down more than expected, and gasoline inventories up more than expected. And then Thursday, again, the jobs market, initial claims higher than expected, and continuing claims down. Now, again, we'll talk about the Great Resignation more, but part of the continuing claims being down is, I think, labor participation. People are just they're not looking for jobs anymore. They decide to drop out, start their own businesses, the Great Resignation, etc. So, initial claim being higher is a negative, because that says people lost jobs, got laid off, they started unemployment at this point. So these are not people that have dropped out. These are people just starting to claim unemployment. So that's a negative. Again, I think both of those trends are negative. PPI was only up half of expectations. So again, producer inflation is subsiding, but consumer had increased. And then we got nat gas inventories down a little more than expected, and then the prices decreased. So that was a little surprising as well. And then the bad retail sales, we talked about that, and then also consumer sentiment was bad. And then we talked about the supply. Is the Baker Hughes rig count tells you how many people are producing oil, and it increased significantly on Friday, and yet oil spiked up. So again, that's, to me, that's counterintuitive, because the supply is increasing significantly, and prices went up. So I expect this supply, and this is a very quiet increase in the supply. So that, and let's see, next week we'll see there's a OPEC minutes come out if they start talking about releasing more oil. There was a headline, and again, a headline that came out that says OPEC does not want $100 oil. The reason they don't, I would speculate, the reason they don't want $100 oil is they don't want the frackers to be able to be more profitable and start coming online and take market share. So they may well increase their supply to keep the price from hitting $100. So again, all these factors tell me that oil prices are not going to, it might go to 100, but it's not going to stay there. And so we'll talk again when we get to another strategy. We'll talk about how we're playing that. But I expect oil prices to eventually start to drop again. So next week we can look at some of the economic events. We can flip our calendar to next week in investing.com. Again, Monday's a holiday, markets are closed, and we see Tuesday we get an OPEC report. We might get some news there on oil, so that might start driving. And then we get oil stock later in that day. So again, those may start to drive oil prices back down. Then we get standard housing data Thursday, jobless claims again. Jobless claims I expect going forward we're going to get more of the same. The initial claims may eventually peak and continuing may keep dropping off. I think we haven't seen the last of the Great Resignation. So people are going to keep dropping out of the labor force. And then again on Friday we'll hear rig counts, etc. So more oil type data and commodity data on Friday. So let's continue and see what else we can find. Okay, let's take a quick look at any additional data we can get from the Markets tab on Webull. So I'm on the Market screen in the online browser version of Webull. As always, you can find our referral link to Webull in the description box below. Get 2 or more free stocks with your copy of Webull. We also have a more detailed video about how to use this data in the Markets tab, so I won't go into too much right now. But we can see we had slightly more decliners than advancers on Friday. although the histogram is still pretty tight. If we look at the inflows, I found this interesting, is although the Dow was dropped and the NASDAQ went up, we saw more outflow, less inflow in the NASDAQ than in the Dow. So I thought that was counterintuitive given the price. But it probably again says that it all flowed into your biggest large cap techs on Friday. If we quickly look at the after hours to see if we see a trend, we see some healthcare, some biotechs were up, a mixture, and then the biggest losers after hours. Probably again more earnings driven. We're going to see more reactions to earnings, and that's where we want to look for irrational responses. You can see the earnings again in the earnings calendar, the upcoming, and the markets tab in Webull. If we quickly go to the best performing industries and we do all, we can see where the trends were. Again, energy, is positive. We're going to, see mostly energy. And other than that, some utilities. Again, mostly energy is the green sector. So now if we look at the ETFs as well, see the trends in the indices. Again, a mixture up on the Qs, down on the Dow, down on the Dow. Small caps, that's kind of interesting. S&P up on the small caps, so that's kind of interesting. That kind of goes along with the January effect, right, where we saw small cap value has a tendency to outperform per the January effect. Although the Russell has been going down, okay, so we can see here's a bet up on the Russell. So those two things are saying that as of Friday, people were betting up on the Russell, up on small caps. So it may see a recovery in the near term. We will see, and then up on the NASDAQ. So industry-wide, again, that's communication services, a little interesting that was positive. Energy's positive, healthcare mixed. Technology was positive on Friday, although again that was and then consumer defensive we see was positive. So that kind of goes along with the trends we were seeing. Financial services was mixed but negative. Again, the bank's earnings was not good. Look at commodities, we see metals, precious metals, biofuels, again precious metals. So again, basic materials is a trend that we want to follow when we see a good opportunity. And then we'll see bonds, iShares, China, and high yield. Okay. So again, this is additional data that you can find on the Markets tab in Webull that we find helpful. And now let's talk about our strategy and then we'll wrap. So let's talk about some additional trends, themes, and some strategies, and then our question for the week to think about as we go and take all this data and then make our stock picks for next week, the week of the 17th through the 21st. You probably have heard now that most people are talking that they're expecting 4 or more interest rate hikes next year. You'll hear several of the other Fed officials are talking, and they're saying, at least 4 probably, and people are even saying possibly more. So the expectation now is 4. A lot of people are saying they're going to start in March as they wrap up their tapering. And all of these things are, in my opinion, are going to create more volatility. And what they call, when they make the first interest rate hike, they tend to call that liftoff, going from 0 to whatever, 0.25 or whatever, they call liftoff, and that tends to be a jarring event. If they go more than 0.25, it will be extremely jarring. So there's really some potential in the March timeframe for some significant market volatility. Now, is that going to cause a crash or just a major reaction? Like a taper tantrum, just a flash crash? It's hard to tell, but it would not be surprising. And given that, one of my major concerns is if you are in a 401k, if you're stuck in a 401k where you're in one of these life cycle type funds where your only choices are a mixture of bonds and stocks, well, lately we've seen the indices, the stock indices and bonds declining together. That standard theory of these life cycle funds is, they do when stocks go down, bonds go up. When bonds go down, stocks go up theory, and therefore it should stay balanced to maintain your value. Well, lately we've seen both stocks and bonds go down together, and so those types of life cycle funds take a hit. And if you're locked into those in a 401k, you don't have a whole lot of choice. So just a concern, again, this is not financial advice, but just a concern to think about is, is there an alternative? If you have an alternative, given the current behavior where stocks and bonds are going down together, you don't want to get locked into, a large loss in your 401k where all you can do is wait it out. Now, my philosophy in those regards is you wait. If that happens to you, you just wait it out. Don't panic. Don't pull your money out. Don't take, don't. Right now, a loss is just on paper. If you pull the money out, you're realizing the loss, and that's what really hurts people. Is when the market does crash, they panic. They pull their money out of their 401k, and they lose 30% of their money. Whereas if they just left it there in a couple months, years, it recovers. So that's where people get hurt. That's why I want to express that concern. So just be prepared. If you can take action to prepare yourself for a potential panic if and when that happens. Now there's still tons of money sloshing around in the economy. So the economy's healthy. It's not going to be a long-term effect because of all the money sloshing around the economy. That's got to go somewhere. So my question for the week that I want us to think about, talk about in our Facebook group, etc., talk about the comments of this video is, where's all that money going? And in particular, we hear a lot of talk now about these high PE, money-losing growth stocks taking a hit. Well, they're spending crazy sums of money. That's why they're losing so much money. So where's all that money going? I want to go buy those companies where they're spending all this money, because that's where the money's going to stay. If they go out of business, the money's going to end up somewhere. So where are they spending all this money? All these apps, all these internet companies, where are they spending their money? If we can figure that out, there's the opportunity, because the money's going to land there. So, are they buying software? Are they paying developers? Are they paying freelancers? Is it going to Microsoft? Is it going to the clouds? When they, Teledocs and the ARC, Kathy Wood's companies that are spending tons of millions, billions of dollars, okay, they got that money from investors. Where's all that money going? Because that's where the money's going to land, and those companies are going to do very well if these guys keep spending like crazy. So that's what I'm trying to figure out, is where's all that money going, so I can position accordingly. Is it Microsoft? Is it, I heard Infosys, Accenture had good earnings. Those are consulting firms. Let's talk about this further. If we can figure out how to take advantage of this opportunity and not get caught up into these guys that are losing tons of money, and get into the ones that are collecting all their money, I think that would be an opportunity that we could take advantage of. So tell me what you think. Put your comments in the below this video in our Facebook group, and let's talk about it, see if we can make money together finding these opportunities. So I hope you like this. Please smash the like button to help the YouTube algorithm share this with more traders around the world. If you're not a subscriber to our YouTube channel, please consider subscribing. Please share this on your social media and with your fellow traders. And let us know how else we can help you. How can we improve? What would you like to see more, less of, etc. And we'll come back tomorrow, and we will pick our stocks that meet some of these themes, take advantage of this data, etc. So we hope this all helps, and have a great day. I will see you tomorrow. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.